Hey everyone, it's Coram and Harold Morris here, back with your option of the day to break down a trade idea for Boeing today, Harold. So it's good to have you back. Let's take a look at Boeing's chart. I mean, this stock has been in such a strong uptrend for quite a while now. So the chart here is looking pretty bullish.
Yeah, very bullish after a strong move, and it's nice to see that the stock is kind of trading sideways for now. So it's good to see a stock uh, take a little bit of a rest by going sideways.
Yeah, so we have a bullish outlook here. And then in terms of our thesis for what we could expect the stock to do, what are you seeing? You're seeing that maybe if it trades sideways more, maybe it could pull back a little bit. What sort of option trade could we utilize with the chart that we're seeing here?
Yeah, so basically, I'm treating this as a flat base. Okay, so you see the high there, this 216 and change, that could be your buy point. But one of the advantages of a vertical spread is it can profit as the stock is going sideways, and even if it goes down a bit. So that's one of the things I like about a vertical spread. So if we go into the
Thinkorswim dashboard.
right, yeah, into the Thinkorswim.
Right.
We'll take a look at the strikes we're going to be choosing. All right, so we're got Boeing up here, and I'm just going to go to the, ideally I like to go 45 to 60 days out, and I like to stay in the monthly. So I just didn't want to go 70 days, 71 days out. So I'm going to go the 36 days expiration there. So I'm going to just click on that to expand it. You've got calls on this side, puts on this side, and I'm going to do a $5 wide bull put spread. So I'm going to sell the 205. So I'm just going to right click right onto 205 and I'm going to sell and then go to vertical.
Perfect.
All right. So I'm going to sell the 205 and then buy the 200 strike for protection. And that's going to give us a credit of 142. So I'm going to click on this lock here just to lock that in. And let's take a look at the numbers here. So I'm going to click on confirm and send. And this is going to give us the numbers. One of the things I like is you see 203.58. That's our break even. The stock is trading around 212. So, it can go down quite a bit before we have our break even. So it's another reason I like selling vertical series. And then we have our max profit at the 142. And keep that number in mind. 142 is our max profit because we're going to look at how we manage this trade here.
Right.
So let's go to the Analyze tab. I'm going to click on that. And I'm just going to right click on the strikes here. So right click on that, left click on Analyze Trade. And here is the trade here. So we got our strikes here. And we've got, I like to do the day stepping. So I'm going to go up here to the expiration and day stepping here. So this is going to tell us, you look at the dates here. So as I
over time, what could unfold.
Right. So this, and again, this is all theoretical. There's no guarantee that these things are going to work out, but at least it gives you an idea of what could possibly happen. So that lower left part here, down here, you just keep an eye on it and you kind of move your mouse around. These are the prices. So the increase in price, you can possibly see what's going to happen with this stock in the near future. Another thing I like to do is go over here to this menu here, click on that, and go to set slices. And I like to do the 8 rows at 2% each. So 2%. So here we are. Here is where the stock is trading right now. And then it just shows us what's happened, up 2%, 4%, 6%, and then down 2%, 4%, and so on.
So meaning if the stock moves up 2%, this is what would happen to all those option metrics, your delta, your theta, your P&L, all of that good
P&L,
stuff.
right, exactly. So again, here's a way of just kind of getting a glimpse into the future as what could possibly happen with the stock here. And one of the things we want to do is manage the trade. So it's great if this works out, but how do we manage the trade? It's not going to go up forever. And I'm going to just click on the side here. I got some notes here. So we like to close a trade at 50% of the max profit.
And Harold, I
or week.
remembered that number. The max profit was 142, right?
Right, right. So you just do the math. 50% of that is half of that. So that's where we like to, that's our target there. And so if you reach that target, you want to close the trades, whether you reach it tomorrow, which is possibly, or a week or two from now. So that's what ideally, and the reason why we do 50% is because once you go out in time, there's not a whole lot to make after that. And there's the old expression, bulls and bears make money, but pigs get slaughtered. Well, if you try to hold out for more because, hey, I got 50%, I'm going to hold out for more, well, then now you're risking that profit there. So it's always best just to lock in that profit, capture that profit, and move on and look for something else. So that's our target there. And then if we reach our target, so let's say we reach our target at 21 days to expiration, your trading platform is going to show you how many days you have to expiration. So we're either going to close it out for a profit because, hey, we reached our 50% max profit, or the trade is not working out for us. We just want to take the loss. Hopefully it's a small loss and move on to something else. Or we're going to roll the trade. Now, we don't talk about rolling here, but rolling is just a way of buying more time to see if the trade is going to work out for you. And if you do roll, you do want to roll for credit. Yeah, occasionally I will roll for a small debit, but ideally want to roll for a credit when you're trying to buy more time to see if the trade is going to work out for you.
All right, Harold. Well, thank you so much for breaking down that bull put spread in Boeing for us. That is a credit spread, and we really appreciate a full breakdown of what goes into this trade and sort of the mindset and the approach as a trader when selecting the expiration, looking at the monthlies instead of the weeklies, and figuring out which strikes to go with. So thank you so much once again for breaking all of that down for us.
Sure.
All right. And make sure to tune in next week for another option of the day idea from Harold. We will see you then. But of course, the coverage continues with your options coverage from the team, investors.com/options for more info on that. And check out the new Options Trader app from IBD. You can download it from the App Store today.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.